about what asset growth is and banking industry growth is. And we are dealing with not just about financial inclusion and creating accounts, but actually creating real banking impact there. And obviously, the discussion is incomplete without talking about fintechs and what we are seeing from a digital public infrastructure standpoint. So let's go through these. Now, every year, this is the fourth edition of our summit in Mumbai. And we have this graph plotted there. And every year you see the graph is getting steeper by the day when it comes to what you're seeing from a payment transaction, both volume and value, right? Now, obviously, in the last year, we've seen some very important regulatory intervention in driving some key initiatives. The CBDC is a very critical one. I mean, having a central bank digital currency, which is you know clearly an area that we are seeing already having traction. We do see some 40 lakh users there. The UPI share is obviously driving a lot of volume. And we've always had RTGS. And the impact of UPI is what you're going to see in the next page, which is really talking about what the NBFC-led lending has actually made to the economy. Now, I invite your attention to the graph on the bottom right there, right? Now, that's talking about what NBFC and bank credit growth has been. 10 years back, you actually saw the growth of NBFCs at 15 and banks at 10. And now you're seeing that that growth of NBFC has gone much higher, right? It was always been faster than the banks, but you see that growth has become significantly higher, which is driven by a few factors. The first is you clearly see that we have we do have a lot of lending that is driven by what you would call as the digital economy. And UPI is the share of UPI value is growing fast. There is a mass, market credit card alternative that's coming up with what you're seeing with this UPI initiative. And you do see that the number of lenders who actually are getting to drive this, together with, what you would call as an economy or ecosystem-driven lending is making an impact there. And we do see a lot of initiatives from the regulator, which is obviously making sure that the lending is regulated. Digital lending, there has been a direction that has come in May 25 this year, which talks about fund flows and disclosures. We do talk about compliance norms that have come in, and lastly about tightening of what you see as the default loss guarantee or DLG, right? Now, we talked about lending, but let's also talk about what AI has actually been making inroads in our economy. So the AI revenue in 2025 is estimated to be more than 1 lakh crore, growing at a stupendous speed of 39% CAGR. We have now a National AI Strategy 2.0, which is dealing a lot with privacy and DPDP. We will be talking a lot also about talent and skill. Sanjeev mentioned about what it means to actually build, people readiness for what is Future Ready Bank, and it's an area that is of also importance there. And we also see that the India mission, which is where we are seeing a lot of push from the government, making obviously accelerated impact to what we're seeing on the AI front. The fourth theme is obviously on financial inclusion. Now, this has always been an area that we have been, focusing on, talking about, doing something. But now you see that this has actually got into the, critical mass, right? I mean, we have an 89% financial inclusion, record there. We do see 50 to 60% of new customers are originating from tier 2 and 3 cities. This is huge, right? This also goes back to what potential and what is the unlocked potential that, which is with the unbanked segment that, we get to see there. The deposits, close to about 38% of the deposits are actually coming from the semi-urban places and rural places. That actually talks about what it means from, especially when dealing with retail liabilities and CASA. I mean, that's a significant portion there. And a lot of initiatives, be it Jandan, be it the UPI, future for the future phones, the DPI initiatives or the regulatory sandbox IORS, you see a lot of them actually are creating what you would call as and what you would call as a wider acceptance, across the country. And lastly, I think we are. This is a summit that we will be talking a lot about what fintechs and what the DPIs mean for us. The digital public infrastructure, the rails that are being laid are not for the short term; they are more for the medium and long term. Be it the digital connectivity, be it the expansion into the smaller cities we talked about, and clearly driven with a lot of the infrastructure that is being set up. And the important number is that you see that fintech adoption is estimated to be growing at about 31%. I mean, this is also giving you a sense on where the direction is, and clearly India is leading the way, even from a global standpoint, right? Now, what does that all mean for all of us, right? I mean, ultimately, implications. We have bankers in the room, and what does it really mean for all of us? A quick look at that. Now, key numbers. We are talking about 359 lakh crores of banking assets growing at about 10%. We see our cost to income still operating at 48, 49, which is quite high. The MSME credit lines, and you can see that it's a fraction there, right? I mean, we have 360 lakh crores of overall assets, but MSME is only at about 40. Clearly, an area that that's an important area of focus. The good news, obviously, is that we are one of the uh, economies that have the largest number of APIs launched, about 150 plus in 25 alone. So these are some important factors. And the key developments, obviously, is on the areas of what you see as digital economy, digital lending, and the banking penetrations there. So what does it mean for all of us as implications? I think there's 5 or 6 critical themes that are going to be critical or going to be important for us to be bearing in mind. The first, the asset book growth, right? We do see that there are models evolving. There is need for this. There is an appetite. There is an unmet need that can clearly make an impact. And an expanded ecosystem is only going to help accelerate it. An important aspect of that is going to be the SME book, which is obviously also focusing on the tier 2, 3, 4 cities. Branch light models making it even more accessible and even more penetrative. With all the digital process innovations that we are doing, if the throughput, the income throughput actually is made to impact, we will be seeing the cost to income actually getting to what would be acceptable numbers there. Fee income, again, this goes back to the services that are actually getting to be rendered by banks and what that means from a fee income standpoint, not just operating on NIMs, but on what you can see as innovations of products that actually are generating what could be income drivers. AI, which is not just about personalized AI, but also making sure that is embedded in the products and services being rendered. And obviously being a part of the ecosystem, be it the DPI or or having collaborative investments with what you see as fintechs. And lastly, but certainly not least, is making sure that you are ready from a people standpoint, right? Which basically means investing in the right skills, creating a culture of innovation, and actually getting people to be ready for what, as Alvin Toffler says in Future Shock, when future arrives before you're ready, you get to a future shock, and unless you're actually getting your people ready, that shock is going to be inevitable. So thank you again, and I hope this was a useful context setting for what we'll be having as an interesting day ahead. Well, I also happen to be moderating the first panel, so I am not leaving the podium soon. Thank you. So we have our first panel discussion. While the topic for the day is being future ready bank, and even before we get into the house, I think it'll be important to understand the what from a strategic perspective, and what does it mean for the bankers in the room? What does it mean for us? So to have a very interesting discussion, I would like to welcome my panelists on stage. My first panelist, if I may invite Mr. Vikram Tandon, please put your hands together to welcome Vikram. Vikram was a former CHRO at HSBC and with Adani Group. Welcome, Vikram. My second panelist is the national head for consumer bank at Federal Bank. Please put your hands together to welcome Mr. Virat Diwanji. Virat. My third panelist for the day, he's the group head for banking as a service, international banking, and the digital ecosystem banking at HDFC Bank. Please welcome on stage Mr. Abhijit Singh. Thank you. Morning and welcome again on the panel. Uh, Obviously, setting the tone for what would be an interesting day ahead. And, the conversation here is actually, let's say, the 30,000 feet view from where the industry is and where the industry is likely to move towards. And as we talk about the future of banking, it is important to also get a perspective on where we have been and where we've moved forward from. And going back to the comment that Sanjeev made in his keynote, strategy has always been driving technology, right? And we now see a lot of collaborative work that is enabling technology driven business, should I say. And that's the question I'm going to ask. Start with you, Abhijit. You have a mic with you there? Yeah. So my question to you is, what do you think strategy driving technology will mean for the future bank? And more importantly, what do you see the tech enabled ecosystem play that we are seeing banks adopt, in the way forward, and something that you've been personally driving? How do you see that unfolding in the near future and the, let's say, medium term future?
You have it's a very long and tough question.
Loaded question.
Loaded question, So I've been a CIO for a long part of my life and uh, now transitioned into business. But earlier what used to happen as CIO, you will say, yeah. I think over the last few years, I realized, if I look back at my career, 2014, 15 was what AI is today was happening to digital. So you had a business strategy, you would, as a tech strategy, you'll first look at business strategy and decide, let me form a tech strategy. Now, today's conversations, when I am seeing in the boardrooms, I don't see the CEO talking about the business strategy. He's looking at, what is the thing that technology can do. So it's kind of reversing, if I may say so. It's very different. Earlier it was more an outcome-driven business guy will say, I want to do so much of business, and then you will mostly be a support function from a technology point of view. Today, it is completely turned on its head. It's all about, I have seen many CEOs talking API. I think AI, everybody talks about it. So the language has actually changed in the boardrooms, and there is a lot of tech enablement that is happening. So tech has definitely, over the last 10 years, moved from kind of a support function to very integral to business strategy. So in some places, actually, tech is forming the business strategy. So the unit that I am running is actually tech forming the business strategy. So it's very interesting, So over my course of my career, I'm seeing all this happening. I think the second question that you asked was, how do you drive this in the future? Yeah. All of us, in this room talk that data is the new oil and things like that, but in most of our organizations, data is broken by silos. I think that part as a industry, we need to move forward. And actually, the biggest shining example in front of us where data is not in silos is actually this country. If you look at most of the stacks that are being created, are actually you can plug in API, you can use Aadhaar, you can use national identity. You could, take a COVID certificate out of it when you were having a COVID issue. You could take a health insurance on top of it. So probably India as a government or a public sector is a shining example of how technology can drive a business strategy together. And that's something that I always carry with me when I talk about technology even in our organization. uh, I think the last part of the question is very interesting. So in HDFC Bank, we looked at ecosystem as a strategy. So, I was just in the morning, just preparing for this, and very interesting. UPI is a great example, where the ecosystem has come together. Banks have come together. Uh, Payment apps have come together. Merchants have come together. Even, my local vegetable fellow has come together. He's a user of UPI. So all of us have come together and actually formed the UPI. Now, if you look at statistically, UPI is doing about 46% of all global digital transactions. It's not only payments, it's all global digital transactions. So it's a big, big thing for India. Even, we may be closer to the numbers that China is doing. Yeah. The second piece is that, sad for us, sad for the bigger banks, 65% of our customers take a product from another bank. It's not their main bank. So it's actually just driving a clear message that no matter how big you are or what kind of a bank you are, it's very difficult to meet the aspirations of today's customers, who want everything everywhere, who want everything instantly. So partnerships is the way to go forward. And in our business, what we are doing basically is uh, we had branches in the past, where you'll go and put a branch in the most populous place. We are looking at, how can you bring bank into your hands. Our tagline is Bank Aapki Mutti Mein. And we are trying to, be part of your lifestyle. So if you are doing a payment transaction, how can banking be there? If you're buying something like in Amazon, it's a great example. You're buying an iPhone. Most of the banks are doing that they give you an EMI to it. So that journey which is happening for banking, is where we are moving. If I look at your question, it's very nicely uh, connecting all the dots of my career over the last 20 years or so, that it starts from, how tech has now become very close to the business strategy. What are the enabling blocks that you need to actually do, like data, etc. And then coming to an outcome which I'm seeing today, where banking can be embedded in your lifestyle.
Interesting there, Abhijit. I mean, you talked about data being the new oil, and somebody was saying, chips are the new oil, and somebody said, but chips are made from oil. So, so, but thanks for that, Abhijit. I mean, that's clearly talking about what you've seen over the years. But central to all of this, in ultimately we're doing all of this for the customer. And I'm going to take that piece of the discussion to you, Virat. You know, banks are going through, let's say, transformations, and there is so much that's happening around us. But end of the day, I mean, we're doing all of this with the customer in the front and center of everything we're looking to do. Well, the segments may change, the customer may change, or maybe new customers you're dealing with. But the essential part of what we are looking to do, which is serving the customer, doesn't change. But I have a question for you. How have you seen customer service evolve over the last few years? And how do you see customer service going forward? I mean, when we are dealing with, uh, things that are more digital, what does it really mean to customer service? And what should banks really do to be up there?
Thanks, Ram. You see, I start with the basic. If you ask me, really, banking is a business of trust. And service is a place where banks have an opportunity to really build trust with the customers. Over the period, earlier in the early days, we used to have how is the customer service measured? Some of the metrics that was used as how many complaints you get per thousand customers. From there, it moved to how much time, the turnaround time it takes to solve these things. I think it has now changed. Means those are the metrics. I'm not saying they are not important, but it has changed. And the way in which the present day service is getting into is predictive personalized, and trust anchored. Means experience that I give to the customer. No longer he looks at me as a banker or a bank. He looks at me as a service provider. Coincidentally, I am dealing with his money. So that's the fundamental change that you see. And if I have to exaggerate a bit, we are moving where don't look at what technology does to the service. How importantly the technology adds value to the financial life of the customer. I think this is the change that will happen. It is happening. And today, I don't think technology is changing the service. It is the expectations which is changing. Today, a customer expects the speed of AI, empathy of human, and trust of an institution all in one go. He does means today we have lived in the world whereby it was in stages, but now we know there are certain institutions in past where said that acha uska service bahut acha hoga. Now customer is expecting, and he is equating across the industry. He doesn't look at whether you are from a hospitality industry or where you are from an engineering industry or you are from the banking industry. So that's what is happening. And the other significant change which I have personally witnessed is customer service from being a cost center now is moving to a proactive value creator. And I think the banks which will understand and accept this particular philosophy will succeed. And that's my very clear view and the way in which I see how it is moving. Now, if you have to see it from the customer lens and how it has changed, says, please solve the problem before I come to know about it that there is a problem. That is his expectation now. And we have seen over a period of time. Earlier, we bankers were waiting for the customers to come in and say, I have a problem, or how will you help me to do this? Now you have AI driven things whereby it nudges you, it preempts the things, and it really pushes you to do the right thing. So that is the more important change that is happening. The second change, or the second thing which has evolved over the years, and when I take it from the customer lens, the customer says, I need speed when I need, but I need human when it matters. You can automate the processes, repetitive processes you can easily automate. But when it comes to sensitive or highly involved transaction, customers look for human touch or reassurance. And that's where the present level of service will certainly start changing. The third area, again from the customer lens, if I have to start, the customer says, I need to trust your technology is treating me fair. Today, you have algorithms and AI doing everything for the customer. But customer says, I need to trust your technology. And that's where the fairness, the evaluation of the model explaining, they might be enamored by what an AI can do. But at the end of the day, if it doesn't explain, they just look at it as a black box. So that's the other thing. The other part, we as bankers, means we over the years we have evolved the channels. Now, what customer is saying is, don't ask me to repeat. And that's where the real challenge will come in. You can start your issue on a chat, go to the branch and monitor the status on your app. But keep my context in mind. Don't just proliferate your channels. I should be able to get what I want very smoothly. That's what customer is saying. If I take the fourth view from the customer lens point of view, he says, use my data to help me. Don't overwhelm me. So data means when I'm taking data from my customer, I have to make sure that the customer trusts in sharing the data and he's convinced that he's going to, means as a bank, we are going to use it for the advantage. And there is, means give and take. I will share my data if you serve me better. So that's the third or the fourth lens for the customer, and how the customer service has moved. And if I take the fifth one, whereby the customer is now saying, don't leave me alone, don't leave me behind. And in a country like India, where you have different literacy levels, different level of comfort on the technology, today we again as bankers have to think about, we may design the best app, but it should work on the feature phone. Voice and vernacular has become the basic requirement for the customer. If we believe that we don't want to leave the customer or exclude the customer. So he says, please don't leave me. I'm also an important customer for you. So I can go on and on and on, Ram, but I think this is where the change that I have witnessed in customer service over the years. And I don't think any bank would be judged that how good their digital channels are. From a service point of view, the customer will look at how the systems were intelligent enough, which were invisible, intuitive, and giving me the best experience that I wanted to look at. That's how
It's the experience that matters eventually.
that's
And I quite like the way you put it there, Virat. I mean, talking about it has to be A, predictive, B, it has to be personalized, and it has to actually reflect trust at the end of the day. And don't overwhelm me with insights that I'm not looking for, but do help me there. But you actually made one comment, Virat. I just want to go back to that. You said, look, customer service is no longer a cost center or a cost. It's actually more of value addition, right? Could you elaborate for us what that means, for banks, and how does value really get added there?
no, today means value addition. When what I meant is customer retention. He is not, means today any banking product is a commoditized product. I can come out with a new product and within 48 hours my competition can just get the same product up and running. But it is the experience, how I go through the entire process of either buying that product, or when I have a challenge or a problem, how am I being attended? So that is where the value creation comes in. The differentiator means in the AI world, it will be the data uh, privacy and security of my this thing. But these are all, and I have to invest. I have to invest in technology to make sure, because otherwise, the way in which in the early days I used to look at it, if I have to provide for service, how many phone calls will come in, how much agent can take a call in a day. So I will need a call center with so many seats, and that's my expense. Today, I'm viewing it that I'm investing in this to make sure that the customer stays with me, and longer he stays, the probability of me to sell him more products goes up. And what do you call, what he just mentioned, which he just mentioned, that if the 65% of the customers bank with others, that's the biggest challenge.
Yeah.
And it's in India, that's the biggest challenge.
It's the opportunity that is saved. And I think you were mentioning this morning to me when we were having a chat, nobody measures opportunity loss. And that's really the measurement that we're talking about as value addition. No, very interesting, Virat. Please, Abhijit.
If I may just add, I think what I've seen on customer service earlier, it was a glorified name for a call center. So, you would get some queries and you would call it customers. But over the years, I've seen that customer service departments have actually started, and especially I see in HDFC Bank, is they're looking at the whole experience. So you can't call them customer service actually anymore because they're looking at the whole experience, putting learnings of various problems that have come through and how to they define a process. It's really evolved.
The names have changed. Earlier it was called call center. Then came the customer experience center. So you even now to attract talent, you have to bring in the real motto behind it. That what you actually want to really offer to your customers.
You talked about bringing in talent, and I want to take that to you there, Vikram. Talent today is very different from what talent we probably were looking for 10 years back or even 5 years back. And you've actually been a veteran. You've seen how the people angle or people perspective to running business has been over the years. So I have two questions for you. When you are building a future ready bank, you are actually building not just uh, the institution, but you're actually building in a culture of innovation, a culture of investing in skill sets, and obviously it takes more than what meets the eye. So my first question to you would be, what if you have to pick a few critical success factors that would define a successful bank in being future ready? What would those be in that context? And my second part, which is an extension to that, is what kind of leadership skills and what kind of leaders would we need to create as we get ready for the future ready banking as we speak about?
Thank you so much. First of all, I'd like to acknowledge that you put up a terrific presentation. I thought that was an excellent overview what's happening in the industry. And second, I'd like to ask the audience. I don't know if you asked Alexa or your Siri or the phone. Does your spouse love you? And it should be able to give you a fairly accurate answer. Maybe in 12 months with a solution also. And that's where technology is coming in a big way. And you really realize the value of technology that's got embedded in Indian banks when you travel overseas, where the lack of technology is so stark. When you swipe a credit card or you try and do a money transfer, there are so many bottlenecks and there is nobody to help. Just because it happens fairly seamlessly in India, maybe it's taken for granted, but I would say as a user and as a frequent traveler, Indian banking is really awesome. Of course, there may be opportunities to do more, but overall, I just feel as a consumer, apart from the frequent KYC ask, everything else works really good. So I've tried to put in some comments of where will we be in this room, maybe even 3 to 5 years from now, as busy executives, trying to define a career. And I had put some comments together where, we are transitioning from putting AI into products to putting AI into people. And that's where banking comes in, as Virat has also mentioned. The real impact of Gen AI so far has been into work only. And just like Word, Excel, PowerPoint revolutionized, and some of you are much younger, so maybe you haven't seen the world before PowerPoint. But it really changed the way work happened and the way the work got presented, from months into like weeks or days. And today, AI is bringing that down from days into minutes, including nanoseconds. When you input something into Chat GPT, you expect the answer in under 30 seconds. And that's what is really defining how work will happen in the future. I think AI is going to redefine processes, job contents, what people do, and redesign the workflow completely. There is a really big opportunity for banking employees to pair with AI to rebundle the tasks that they do, to work across silos within our own banks, as you and I experience them, and to really create a win for the customer. Uh, Traditionally, people have been married to the process and the task, and maybe there's an opportunity to refocus it on the customer. I think going forward, teams will work along with empowered AI agents, okay, in banking as well. And each one of us, our job descriptions will completely change in the bank of the future. Or maybe they are now. And I would expect that every job description will have three parts. The first is what will the human do, okay, which is us in this room. Second is what is the AI assisted part of the job. And third would be really what is an empowered AI agent that will do. And with the changes in the job description, I expect the whole performance management, the way performance of humans, of AI assisted roles and AI will completely question the existing performance management frameworks. And finally, the reward cycles will and must undergo a very substantial change. And I feel that what is at the center of this is the employee. The reality is that not much has changed in the bank today. I think there is almost a revolution taking place for employees, for the customer, in the back office, in our global capability centers, where reconciliations of credit cards, where audit issues get detected pretty quickly. But for a frontline employee, somehow the banks have not yet adopted AI the way it could. All of us have two arms. AI and technology is going to be our third arm. And if we don't use the third arm, then imagine eating food with one arm tied behind your back or doing anything. And that's where the opportunity is. So I think the better banks will create absolute adoption of AI uh, in their people, and they will start working with AI on their side as the third arm. And the other banks maybe won't do it as fast. So the trick would be to partner with banks to make this happen for us. And that's where the opportunity is. Brings me to leaders. Most leaders are, middle age plus, and nothing wrong with that. And that's where adoption becomes. And to your teams, if you cannot make technology the third arm, then a lot of jobs are going to go away. Banks will triple, quadruple their earnings. Employee base will not go up. So, the smarter banks will repurpose their people, will redesign jobs. And I hope the leadership in this room and others are able to drive that massive change. It is a change management opportunity. There'll be some guardrails, but overall, somebody's got to, you know, be the role model and get it done. So, those are broad comments.
Very interesting. Vikram, as they say, you kind of forewarned a lot of people in the room about what is going to happen. And as they say forewarned is forearmed. You talked about three arms, but you actually have brought in the fourth arm there as well. You know, uh, I will soon open up questions to the audience, but before I did that, I wanted to ask each one of you one question and maybe the same question to all of you. And it's a very crystal ball gazing question, which is, and I'll start with you there, Virat. If you were to actually pick one defining shift that you would see in the banking industry, and should we have this conversation 3 years from now, what is that shift that you would see to have happened? And what do you think banks should actually do to be ready to deal with that shift?
Yeah. So if I have to pick up one uh, change and which I see over period future of 3 to 5 years is we moving from digital banking to autonomous banking. With AI coming in, it will look for the customer needs, automate the decisions, bring it means embed it into my day-to-day life. And in reality, what will happen? Customers will stop doing banking. Banking will happen for them. And I think that's the way it is heading. It is at different stages of evolution. Means we know. And what does this mean? If you really ask me, today now you have AI driven models which nudge me on my whether there is a likely fraud happening or whether there is a repayment coming in. So those kind of things are happening today. I think you have a very personalized journeys coming in, which is based on real time behavioral, transactional, and ecosystem data that is available to you. I think that's the second level means ramification of what I mean of autonomous banking. The third thing that I see in this is how the trust factor, while the algorithms and the things will take over, but you need to provide fairness, explainability to the customers, and that's where the real change is. What will be the result of this as you move from digital banking to autonomous banking? In my view, three or four things will happen. One, the amount of friction will go down to negligible. The trust and transparency will become my competitive moat. And I will have to partner with ecosystem because I believe if the bank is not autonomous internally, it will become dumb pipe in the outside world. And that's the real change that you will see as you move from the digital banking to this. Now, banks obviously need to prepare for it. It's not an easy task. And various banks will be at various stages, and people who take the lead or succeed, I think the foremost that I see is AI ready infrastructure. You need to redesign your operating model, which embeds automation. The third one is talent, means what Vikram alluded to. I need to prepare my people rather than fearing that AI will take away my job. You have to start thinking, saying that AI will actually empower people, and I think that's the third thing that the change that you have to make. Fourth is again partnership with ecosystem. So these are four things which we have to start preparing ourselves if we have to really get to the level. And I don't think means gone are those days where the banks will be evaluated in terms of how much technology that it is using or how efficient their digital channels are. The reality would be how much of their systems are intelligent, intuitive, and giving effortless experience. I think if these three factors is going to be the parameter on which the banks will be evaluated going forward. And in my mind, the process has begun of being an autonomous bank. I think it's time now for us to really start preparing for.
Got it. Vijit.
Yeah. So कल तो सब जगह AI ही है. But if I borrow, the term from Vikram, I happened to go to Singapore FinTech Festival. Every second booth was about AI. And yesterday evening, by chance, middle age plus me went to Tech Roast, and every second guy was an AI engineer. So I think what one fundamental thing which will change, which I am seeing now, is during my times it was only the engineers and generally the computer engineers who are comfortable with programming. Now it is almost every young Indian is comfortable with programming. Almost every second person I talked yesterday evening had a public repository on GitHub. And even if he's making a JSON file or a HTML CSS file, he has a public project to showcase. Yeah. So I think one big factor which is going to come in as we move forward is the ease with which normal people are also able to program, and AI is only going to take it further with you can just ask Chat GPT and it writes the whole code for you. So the conversation or the ease of programming is actually going to define how banks will adopt AI going forward. And I am actually seeing that trend in a very big way. AI will change the unit economics. It changes the way we make PPTs. In my team only, over the last 2 3 years, I've seen PPTs come out very quickly, and I always suspect it has come from ChatGPT. Yeah. On that
So,
note,
so from being autonomous, I think we're also talking about from invisibility to actually being AI driven. Last comments there, Vikram.
So I think clearly earlier the machine understood only Java. Now the machine understands, English. So they are able to write the code, right? It's no surprise. To me, two things I hope banks are able to do. A, I hope they are able to keep my money safe. With so much of hacking and cyber crime, I really worry, will my money be there in a bank account or not? And second, constantly have a new RM every 3 4 months. Or if the RM is too good, our accounts move with the RM. I hope banks are able to have proprietary knowledge of the customer and create that stickiness and solutions with my history inferences. And that churn stops. I just feel as a customer, I'll have far more personalization, and eventually I may be talking to an agent, not an app, on the phone, to say this is what I want to do, and the agent may be talking to 3 4 banks and getting a solution in an autonomous world. So it's not magic, but it's heading towards
Heading
that.
there, heading there.
Thanks.
Lovely. So I think that's a wonderful discussion. You will be having the panelists at the coffee break to ask questions. We're probably running out of time. But can I say a big thank you on behalf of the audience here for a wonderful discussion, excellent insights, and thank you again. We have another next panel on next gen digital banking, building connected value chains. May I request Amit Jain, who is the partner and head at IBS Intelligence, to come on stage to introduce his panelists.
Uh, Good morning, everyone. My name is Amit Jain, and I'm the partner and I head IBS Intelligence. And I'll be your moderator for the next 30 40 minutes on this panel on next gen transaction banking, right? While the logistics are being set up here, I think one thing that stayed with me was, when Mr. Vikram Tandon said about asking Alexa about does your mouse love you? I just hope that there's no OTP that's being sent to either one of us, right? So I think if we can evade that process, that'll be slightly more useful, right? So while the setup is done, can I now start to welcome some of my guests? First up is Indu Anand, Head Transaction Banking Implementation at Nucleus Software. Uh, Welcome, Indu. Then I have Aman Singla, Head Transaction Banking Group at CSB Bank. Welcome, Aman. Can I have Varun Bakshi, Head Product Transaction Banking at RBL Bank? Uh, Tarandeep Singh Lamba, Head Trade Products Transaction Banking India at Standard Chartered Bank. Welcome, Taran. Uh, can I request Nitin Gupta, Head Global Transaction Banking, Corporate and Institutional Banking at QNB India? Transaction banking is a pretty vast topic, right? So I think that's reflective also in, we are covering payments, collections, cash management, liquidity, as well as trade finance, right? So we're trying to do justice to the topic. We have hopefully representatives from each part of it, right? So, Varun, to start with you, you know, how is the role of transaction banking evolving, right? So, as the SMEs now, and the corporates are demanding things faster, real time, as of yesterday. So how do you think the role of transaction banking now evolving?
Uh, Hello. Uh, See, transaction banking has evolved a lot over the last 2 decades plus that we've been working in this space. What started as efficiency for managing paper has now transformed into giving instant gratification. Today, the wholesale world, which is where transaction banking traditionally used to be more prominent, is slowly asking us to go deeper and deeper into the value chain. And after that, the challenge has been like corporates. Corporates are looking for the same parameters that were brought up for banks: greater efficiencies, bringing down cost to income ratios. At the same time, their value chains are not that ready to evolve and adopt uh, as a generational shift is still underway. Most of the people in the value chain, the SMEs in India on the manufacturing side, was started by a generation which understood banking by going to the branch. The next generation is now taking over, and they are, as someone said, probably not as middle aged as most of the people here, and they are demanding and are open to looking at solutions where there is digital adoption, there is faster communication, and faster onboarding. I think onboarding, access to credit is blending into the traditional transaction banking field of just offering faster and more efficient management of your payments, collections, liquidity, or solutions for cross-border finance.
So, Aman, my question to you, as Varun said that lines up, as Varun also mentioned about lines being blurring and the need changing of corporates and SMEs, right? So, I mean, if I look at what product areas, right, whether it is cash, trade, supply chain finance, are there areas that require urgent attention, or are all of them broken, or all important, or all need to be, is there a priority?
Good morning, everyone. So, Amit, I think I'll just take a step back and set the context on how transaction banking has evolved over a bit of last 5 years or so. It was always there in the banks, but it was not a transaction banking portfolio. It was always cash separate, trade separate, supply chain separate, right? So if you see post COVID or near about, the evolution of transaction banking or the banking landscape happened where the rapid innovation came into the picture, right, which led to payments, influx of payments, trade digitalization started happening, supply chain platforms started coming up. The innovation happened, and it was also to an extent complemented by internal modernization of the bank's legacy systems, which is still a work in progress. I think so. This is still continuing, and because of this entire changing financial landscape, what has happened is it was driven primarily by the environment being complex, volatile, because your FX volatility was there, your interest rates were changing, supply chain disruptions happened, which we saw, in COVID, post COVID, and then in Ukraine Russia war, and then with tariffs coming along, a lot of these things have come along, and the only thing which people have to be constantly reminded of is uncertainty now, right? And as a result of that, transaction banking has to also evolve and keep that into mind when we look at. So it's transaction banking, nothing but it's all about money movement. It's all about payables and receivables, right? I think I won't say everything is broken or everything is perfect, but there's a lot of work happening on that side, and will continue to happen. It is a work in progress on that side. A lot of payment rails have come up, which people started using very well. Cross-border payments have become a very important way of doing business because people now look at speed, trust, low cost of doing business, and plus supply chain is obviously again ensuring that the working capital is being made available to the customers, which is not only instant and easily available, but also at a very cost-effective. Corporates changed. Their entire debt profiling has changed. They are moving from normal working capital term loans to trade finance-led kind of working capital loans, right? Which are cost-effective, which also help them, and it also helps the banks because it is short-term in nature, self-liquidating. It's early warning signal, so it is a win-win for both, right? So I think that is happening, and as a result of that, banks and to a large extent, fintechs, as somebody mentioned in the early panel, collaboration has to happen. We have to partner with a lot of people to take care of that. We'll have to come together and ensure that all these issues are worked together, and the go-to-market is a lot more quicker. So I think that's the way it is.
So, Nitin, on to you, but picking up from what Aman said, that it seems like it is evolving and it's going to be a win-win for both the SME, corporate, and for the bank, right? Because there are evolving needs, and even the banks are now doing to streamline some products around transaction banking, right? So, how do you think banks can strengthen the value proposition of these corporates or SMEs, right? Through whether it's digital transaction banking, next gen transaction banking. So, what's the role banks can do to strengthen the value prop?
Sure. Thank you, Amit. So before I come to that, just wanted to draw the attention of audience why the transaction banking or trade is so critical, so important, and why we are having this kind of a threadbare or deep dive kind of discussion to bring the context to what the Honorable RBI Governor said yesterday in one of the forum when he was addressing about the recent data which got published on the current account deficit. One of the prominent reasons which he highlighted, which he pointed out, the reason for the current account deficit number being that much is the imbalance in the trade flows. Now, when we start talking about trade flows, there can be many parameters, many factors domestically, globally, which may impact trade flows, like Aman said, right from the time of pandemic or global wars, or some big geographies have started using tariff as the tool of the power. So there can be many parameters, but end of the day, the impact is coming on trade. Now, with the trade kind of a discussion, we talk about the transaction banking. Transaction banking, like Ahmed also briefed, is a part of the banking vertical, but then end of the day, it is the receivable or payable or a financing attached to it for any corporate or a SME. Now, I come to the question. So, how banks can support the end customer, whether it is a corporate or a SME, is rightfully sort of digitizing the value chain, the touch points which a bank can have or normally has with those kind of entities. So right from the beginning, where we start our handshake with those companies at the onboarding stage itself, the way Varun said. So if the onboarding process in the form of video KYCs, in the form of, say, self-sustained or self-reliant portal can be given to them so that they can change their account mandates, relationship mandates, signatory mandates. And then once they get onboarded, there is one more onboarding in the form of the asset. So the tech or the digital technologies can be the AI driven, can be ML led, or can be various other form and fashion. But the intent will remain the same from bank as a service provider perspective, how to shorten the time, shorten the TATs, and how to move fast in the overall value chain in terms of delivering the service. So second thing comes is from bank's perspective, we what banks have started looking at is not to finance one single entity alone. We should be looking at financing the entire ecosystem, and this is where the supply chain finance as a part of the transaction banking becomes very critical in the entire discussion. And third thing comes in terms of the data, since we were discussing in the previous panel. And yes, data is also a equal, I would say, a prominent currency for a bank. Bank sits on tons of data. And if this data can be mined using the technology, and we can start giving the flags or signals to the companies so that they can refine, they can optimize their workflow models. End of the day, what company looks at is how their let's say DSOs can be shortened, their working capital can become more efficient rather than they be relying on the external financing. So this is where the company looks at. I also want to quote one similar anecdote when I was speaking to one of the SME whom we recently got into a digital supply chain kind of a model. So that particular, now this is the MSME supplier supplying to a corporate anchor. We, through the help of the anchor buyer, we got them onto the tech platform based supply chain system. For me, it was a product as a bank, but for them, we the entire value chain ended up reducing their payment or collection cycle from 45 days to 48 hours. So for them, it was a matter of survival. So the efficient working capital, all in all, the moment I happen to pass it on to the client, whether it is MSME or a corporate, so this is where I feel digitizing the traditional transaction banking plays a critical role for a bank.
Sure.
If I may just add to what Nitin said, I think the client, whether MSME or, is saying, understand my need, understand my need, and not only understand my need with the data and all, but understand the sensitivity of my request, the time sensitivity, how important it is for me, so that you can come back to me with an appropriate solution in a timely fashion. So I'm sharing data, but please come back to me in time.
And as one of the previous panels said, that don't overwhelm me with the data, right? So, Tarandeep, to you, from a, head of trade products, and, as we've been hearing that trade digitization is an important area, right? So, I mean, are there emerging trends in the whole trade digitization piece? While Nitin did speak about some emerging trends, but do you want to add on some emerging trends and how they're different?
Yeah.
Sure. Sorry. Any, from a trade perspective, are there emerging trends that are different from what they previously were? Because we all know that trade digitization is an important area now.
Yeah. Thanks, Amit, for the question.
I'll try to bring in a more global perspective. Not that we're not doing some of this in India, or it's not happening in India, but I'll also tell you how it's also relevant to the country. So I see five, six big trends emerging for trade, and how trade is relevant to our corporates, to their treasurer. One trend clearly we are seeing is how you embed liquidity into the organization. So whether it's a SAP or Italy or Zoho Books, how limits itself sit within the ERPs, and corporates would not need to request for finance in the traditional way, but just avail funding on the fly. That's one trend clearly we are seeing. You've experimented with that globally, in that some way in India as well. The other big trend that is emerging is how do you predict uh, cash flow? Uh, Again, leveraging AI. So we have some tools in the market where cash flow forecasting is done in some way or the other. But this will become more and more nuanced, where AI will help you not just orchestrate your cash positions, but also limit positions, and accordingly then help you to have much better control over your liquidity and over your banking facilities. The third big trend that I see clearly emerging is continuous invoicing and supply chain finance. What do I mean by that? You corporates, and especially SMEs, will be able to leverage their data by the invoicing that they are doing either through a GST invoicing, etc. How that gets analyzed by the bank, and banks could offer something like dynamic discounting, based on various positions, various seasonality, a differential rate, a differential pricing, uh, and again extending liquidity to those corporates on the fly. Uh, One big trend we again try to play globally, and I think it's going to be more and more relevant, is how risk management can be offered as a service to corporates. Uh, it's a very big differentiation. We as a bank believe there is a use case for that. In terms of corporates leveraging the know-how around risk management of banks and actually paying for that service. Now, those risks could be vendor risk, those could be AML risk, those could be market risk. So the bank is in the business of writing risk, and how you embed that into the onto the platform and provide that as service. Uh, the next big, I think, piece that is coming on the payment space, and I think trade finance will also leverage this. How do you programmably not just pay, but programmably provide trade financing? What would it mean is, through tokenization, you are able to restrict the end use of that funding that you're providing. So there are use cases you define into the program, and you say that these payments that I'm funding you would only go to certain suppliers, certain industries, certain end users only. So again, I think a lot of people are talking about programmability of the or tokenization of the overall currency, and that's again something we are playing in some way globally. The last trend, I think, is there's no longer going to be a standard product and a standard offering. You will see more and more use cases getting created based on industries. So a e-com industry will have a very different way of lending model that banks will create and assess, versus a cement company versus a telecom company. So those kind of differentiated lending models will come out more and more in the space. Again, that's something we are doing very actively. Uh, these five, six trends, my belief is, some of them are already work in progress. Some of them are, uh, could be a bit far, because data again is, not very easy to manage again between cash platforms and trade platforms, and clients are not very ready in some markets. But I think over the next 5, 7 years, this will be a reality, and the whole behavior of requesting for finance from corporates, I think that will change, and essentially trade finance would be embedded into the organization.
Sure. Thanks, Tarandeep. Over to you, Indu. Now that you've heard from Taran that a lot of these trends or a lot of these requirements of banks are either work in progress or I think did he say 5 to 7 years they will be up and live. So, I mean, what technology gaps are still from a technologist perspective are preventing banks delivering this and what is Nucleus software doing in that regard?
Yeah, morning, Amit, and thank you for having me on this panel. And that's a very pertinent question to a technology and a solution provider. So I just wanted to take the word awesome job. I think Vikram in the previous panel mentioned that banks are doing an awesome job. That is the case. While your question still talks about the gaps and how do we fill those gaps, I would say it's more of opportunities. And the way I see from the 4 decades of experience that Nucleus Software carries on lending and transaction banking, and the way we enable banks within India and overseas. So I would like to spread this across 3 areas. One, the data gaps, or say the opportunities around the data. Second, the connectivity gaps. And the third would be process orchestration gaps. So let me just delve a little deeper on each of this. First, going to the data gaps and specifically talking about cash and trade here, because your question was very specific to cash and trade space. So when you talk to cash and trade space, so the trade finance depends a lot on data coming from various parties, be it the customer, the corporate, the bank, the local logistic partners, the customs, and so on and so forth. So even today, data is all over, across banks. It's a huge ecosystem. So the unstructured, the fragmented and inconsistent way the data lying across many systems, it's extremely a challenging task for bankers today to put a context to it, organize that, and make sense out of it. So this is what our experience says. So a huge opportunity lies when it comes to organizing that, giving that seamless experience. Because what we have seen is, especially in the trade space, we still have documents lying in all shapes and forms, be it PDF, emails, those Swift MTs, and so on and so forth. So this is also largely because of the slow adoption of maybe ISO 20022 across the corridors. So this is one. The second area that I would want to focus is the connectivity challenges. We have come a long way when it comes to automation and digitization, right? The ecosystem, there are multiple systems within the bank's ecosystem. And when you also consider the corporates or the customers of transaction banking, then the ecosystem becomes even larger there. So are we still there when it comes to a seamless integration between all of these systems? Maybe it'll take some more time to reach at that stage. Why we as technology partners, why I'm making this statement is we have a lot of observations working with international banks and domestic banks in India, especially. So what do? We have still seen that there is a lot of dependency on those batch file kind of dependent processing, proprietary formats, very isolated host-to-host connectivity for that matter, and say kind of limited AI adoption. So putting an AI first approach there can certainly help in bridging those gaps, and that's a huge opportunity for banks as well as the technology solution providers. And the last and the third point, which is very important again, is all about the process orchestration. So when I say process orchestration, specifically in the context of trade and cash, when I say uh, definitely there is a payment real-time settlement system, and also there is a trade finance system. So do these systems coexist in an absolute seamless manner? Maybe there is still some time to reach at that stage. Okay. So so these are opportunities that we still see, and some amount of gaps still persist, and tie those gaps together are really opportunities for banks as well as the technology providers. So this is how I see, and these are posing challenges for the banks to offer that seamless and straight through processing experience to the ultimate customers.
And is And is Nucleus doing any of this to bring it live for the
Absolutely.
banks?
Yeah, absolutely, Amit. There is an immense focus, especially when it comes to Gen AI, when in our offerings, especially in the transaction banking and lending space. In days to come, you would be seeing that a lot of use cases, because over the period of time, a lot of use cases have, we cannot wait for industry to come back with the use cases, because we know our system better. There are a lot of use cases that we have ourselves identified, which can be a lot of value add to the customer, because in the transaction banking space, now the change is that in the past, it was only meant for corporate customers, but that's not the case anymore. If you look at the banks where we have also implemented our systems, very beautifully, banks have offered it across segments, right from sole proprietorship, MSMEs, SMEs, and the large conglomerates.
Sure.
So a lot of opportunities there, and we're coming up with technological innovations there.
Thanks, Indu. While we do have time, and I have another question for our panelists, but are there any questions from the audience which the audience have? Otherwise, I can then pose my question to the panelists. Any questions? Question now to all my panelists, right? We've obviously spoken about upcoming trends, the requirements of banks. Again, Varun, starting with you, where do you see is the greatest untapped opportunity, within the whole transaction banking space?
I think the answer to that is fairly simple. And I think Ram, in his first slide, showed it. It's the SME space. Okay. In India, SME as a sector contributing to GDP is bound to grow. Transaction banking has historically been focused on solutions for large corporates. Over the years, moved to mid markets. It has not percolated down to SME. So SME clearly is the next focus area. It blends in well with what Taran said in terms of banks looking at ecosystem, supply chain, and the deeper you go, the more SMEs you encounter and the more efficiencies that you can bring in.
Right. Thanks, Nitin.
So again, before I put my thoughts to it, I also want to repeat something which Mr. Anand and Mr. Vikram also has kind of mentioned in their discussion. Banks should not forget the core business, the core agenda, and so that the trust and the money which is lying in the balance in the account remains intact, remains safe. So from that perspective, what I feel is that changing the business model using the technology as well as the partnership is the greatest area of opportunity for banks in today's time. So see, technology, now the thought behind it is that technology is essential, whether it is in the form of UPI rails or real-time payment rails, APIs, AI pilots. It is essential, but then it is not sufficient alone. So we also have to get into the partnerships coupled with the change in the overall business model. Like Taran said, nowadays, whether it is a SME or a corporate, they don't look banker as a traditional, transactional service provider. They want us to participate to support them in their growth. So we, like Taran said, we have to start the banking right from their ERPs, where the actual business is starting. So for corporates, we have to go deep dive, become a partner in their ERP itself. For SMEs, we have to solve the complicated paperwork because they do not have the time and the money to get into IT vendor kind of an enrollment. So to sum it up, business model revamp,
And
looking the end consumer in mind, whether it is SME or corporate, is the greatest opportunity in transaction banking for banks.
got it. Thank you. Taran, from your perspective?
Yeah, I'll borrow from Indu a word, but yeah, I think cash orchestration is the biggest opportunity, as Indu alluded to. How do you, get the cash systems and trade systems integrated? How are you able to look at, the cash flow positions, not just from a collection payment perspective, but also from your invoice perspective, how you're invoicing, how you're doing consolidating the bank, how are you essentially becoming the liquidity brain for the, treasurer? And you're able to provide that in a, single frame. I think that's going to be the biggest next thing or the opportunity for banks to, deliver to corporates.
Thank you, Taran. Aman?
I think the biggest opportunity which is there, it is still to be tapped, is the customer service. I think customer service is something which we tend to take for granted. We, as Sanjeev mentioned, if you do a proper TAT assessment, it'll be far worse than what we actually project, right? So, and we try and avoid that. You talk to any operations guy and talk to any business guy, it says, boss, let it be. We will mention 4 hours, but it doesn't never happen in 4 hours. When does the 4 hours start? We don't know, right? So I think the customer service is one aspect which has huge potential. And if you do that, you will get everything right. I think in the first panel, I think Viraji mentioned about customer life cycle value, right? So that is where you get it. He will continue to transact with you regularly, more effectively, and he will not look at any other bank if you keep it simple and you give him the customer service consistently. Don't have to give him a wow service every time. Give him a consistent service. He knows what I'm going to get. This is what I expect. This is what I'm going to get. I think you are done with. I think that is a very important aspect that you need to look at.
So from SME to partnerships to cash orchestration to customer service, Indu, would you have anything as a fifth
Yeah.
point?
So, Amit, the way I would like to look at it is, I would not really want to attribute this to one single area or say one single opportunity. To me, these three areas complement each other. Okay. So be it technology, be it partnership, or be it the business model innovation. So since there is a direct question to me, if I were to pick one, I would go for business process innovation there. Reason being, as I said earlier also, and I think Nitin also just mentioned, it is not just about offering the transaction banking to one segment now. So complementing all these three areas together, connecting these areas together can create an intelligent and an embedded transaction banking, because customers today are not really expecting or looking bank as a separate entity. They want this to be embedded as part of their business workflow in itself. So no more digitization is focused just on the bank. It is not bank centric anymore. It is a complete ecosystem centric at the moment. So technology can complement, let's say, Gen AI talking about an automation around liquidity, let's say your blockchain focusing about the third party verification, so on and so forth. So all these three areas complement each other, and we cannot work in isolation. When it comes to partnership, bank and the technology solution providers will have to partner. They have to learn from each other. It is not a single entity's job to achieve this, what you just mentioned.
So it's a complete business model
complete business
innovation
model.
with some opportunities around SME, partnerships,
Absolutely.
cash orchestration, and customer service. So I think with this, if there are any questions for the panelists, I think we can also take them later. With this, I would like to thank my panelists for their time and for their insights. And thank you once again. Thank you so much.
Thank you so much.
Thank you.
I 7 minute topic, 15 minute topic break, and then panel 3.